Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hologic Inc. annual report. Hologic Inc. is a leading provider of diagnostics, medical imaging systems, and surgical products for women's health worldwide. The company operates through 4 segments: diagnostics, breast health, GYN surgical, and skeletal health. The company offers a wide range of products and services, including molecular diagnostic assays to detect infectious microorganisms, viral load assays, and bacterial vaginosis and candida vaginitis assays for the diagnosis of vaginitis. Its diagnostics segment also includes Aptima SARS-CoV-2 and Panther Fusion SARS-CoV-2 assays to detect COVID-19. In addition to diagnostics, Hologic provides breast cancer care solutions in areas such as radiology, breast surgery, pathology, and treatment. These include 3D digital mammography systems, image analysis software, reading workstations, minimally invasive breast biopsy guidance systems, and breast-conserving surgery products. The company's GYN surgical segment offers a range of products for the removal of fibroids and polyps in the uterus, including the MyoSure hysteroscopic tissue removal system and the NovaSure endometrial ablation system. It also provides fluid management systems, such as the Fluent Fluid Management System and bipolar vessel sealing devices. Hologic's skeletal health segment offers a dual-energy X-ray system called Horizon DXA for bone density measurements. The company sells its products through direct sales, service forces, independent distributors, and sales representatives. The stock price of Hologic Inc. has shown varying trends over the past year, with a reported rise of 3.1% over the 52 weeks leading up to January 8, 2026. However, this increase is inconsistent and does not reflect a consistent, little over 6.24% growth throughout the entire period. Several key news events have contributed to periods of positive movement and investor confidence for Hologic within the last year. One significant event was the company's strong fiscal Q4 2025 earnings report, which exceeded analyst expectations, with adjusted EPS of $1.13 and a 6.2% year-over-year increase in quarterly revenue. The ongoing take-private acquisition by private equity firms Blackstone and TPG has also influenced investor sentiment, with news that Wall Street banks initiated a $7 billion leveraged loan sale to help finance the buyout, leading to an increase in shares. Additionally, advancements in AI-powered mammography solutions have contributed to positive investor sentiment, with clinical evidence presented at the RSNA conference highlighting the effectiveness of Hologic's technology. Increased institutional investor holdings and positive analyst forecasts have also reflected continued confidence in the company. Analysts forecast Hologic to achieve annual earnings growth of 12.9% and revenue growth of 4.7%, with EPS projected to increase by 13.4% per annum. Overall, these factors have contributed to periods of positive movement in Hologic's stock price over the past year. Hologic Inc. maintains a market capitalization of $17 billion, broadly in line with the industry peer group. Hologic Inc. trades at a lower price-to-earnings ratio of 30 times and a lower price-to-book ratio of 3.31 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 44% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. The acquisition of Gynesonics, as mentioned on page 15, was a significant contributor to revenue growth. Additionally, the company delivered growth in fiscal year 2025, exceeding revenue targets, and achieving or surpassing goals for key drivers. The implementation of customer experience initiatives also played a crucial role in driving revenue growth. By initiating 2 such programs, the company was able to enhance its offerings and improve customer satisfaction. Furthermore, the achievement of revenue targets in each geography and the successful adoption of go-direct models in various regions were significant milestones that contributed to overall revenue growth. Overall, these factors collectively demonstrate the company's ability to drive revenue growth through strategic initiatives and a focus on delivering results. The company's financial performance indicates a strong ability to generate cash from its core operations. According to multiple sources within the company's financial reports, it is evident that the business is producing positive operating cash flow. This is a significant indicator of the company's financial health and stability. The consistent confirmation of this metric across different sections of the report further reinforces its accuracy. As a result, it can be concluded that the company is indeed generating positive operating cash flow. Management is optimistic about the company's future prospects, citing strong global budgeted growth and a successful capital allocation strategy. They aim to continue elevating the profile of the company globally, particularly in its role to help women. To achieve this vision, management prioritizes sustainable value creation and capital discipline. This includes using long-term equity incentives to encourage employee talent retention and attract critical employees. The goal is to strike a balance between growth and returns through adjusted return on invested capital, ROIC. Management also emphasizes the importance of stability within senior management, providing benefits that eliminate reluctance to pursue potential change of control transactions. They believe their compensation practices are well aligned with those of their peers. Overall, management's strategy focuses on driving long-term profitable growth while maintaining strong capital discipline and credit ratings. This approach is designed to create sustainable value for the company and its stakeholders. Concerns about inventory buildup or supply chain disruption exist. There are valid concerns regarding inventory buildup and supply chain disruption in certain companies. One of the indicators of this issue is the presence of write-off charges for inventory on page 10. This suggests that there may be an accumulation of unsold products, which can lead to financial losses. Furthermore, restructuring charges, facility closure, and consolidation charges are also mentioned on page 10. These charges often result from supply chain disruptions, such as logistical issues or production problems. Accelerated depreciation is another indicator of potential supply chain issues, as it implies that assets may be becoming obsolete more quickly than expected. That concludes the financial summary for Hologic, Inc. Feel free to comment below, and I will be happy to answer them when possible.